Hello everyone, welcome back to another daily trading forecast. Today is the 3rd of June and right now we are already in the Euro session. So today we are going to start off with the Euro against the US dollar. So as usual, we are going to take a look at the weekly forecast that I've done over the weekend. And so far we can see that the market is developing in a way that I have forecast as well. Price went up, retest the high, came down and ran out. It has broken below the bottom of the rising channel. So the very first test was right here during last week, and yesterday there was another test. So the price failed to rebound, and therefore as of today it started to fall. So I strongly believe that as for today, we can definitely look to sell the euro against the US dollar. So right now on the fundamental side, let's take a look at this piece of news from Trading Economics. So here are just some of the highlights that's important. So it says that investors wait a solid economic recovery, fears of President runaway inflation, and bets for the quicker normalization of Federal Reserve monetary policy. So right here, it does seems to be that the economy in the US is recovering, is going towards normalization. I mean, when the economy recovers and when inflation are getting too high, the markets will start to bet on the normalization of the Federal Reserve, meaning to say that they're betting the Federal Reserve may start to taper on this. Well, they didn't say it's a QE, but of course we know there is. And maybe in the near future they might start to raise rates, but definitely the market is still looking at tapering for the time being. Definitely not looking at raising rates at all, because that is still a little bit far-fetched. At least after this year, I believe then the Federal Reserve may really start to consider raising rates if things continue to be as good as it is right now. I mean, the economy recovery and stuff like this. So going forward, jobs reports. All right, so if we go to the Forest calendar, I mean, today is the new month. On the Friday, the very first Friday of the month, we have the NFP employment change. So that is always a very major news, because that is a very key focus for the Federal Reserve. You know, they are always focusing on the labor markets. They want to make sure that unemployment continues to fall and reach their target in a way before they really start to taper or to start to raise interest rates. So that is a very important piece of economic data we have to look out for. All right, so so the Federal Reserve announced Wednesday it will begin to unwind the corporate bond holdings it acquired last year through an emergency lending facility to calm the credit market at the height of the pandemic. So plans to sell the bonds and ETF holdings. So in a way, it is a form of deleverage, because when the Federal Reserve is trying to ease monetary policy, and when they are running out of tools, they do QE, and QE means to say they are buying a lot of government bonds and corporate bonds. All right, so to provide more liquidity to the market, or in short, is to print money. So right now they are thinking of how to deleverage, and how is that going to affect the market. I think we can probably talk about that in the near future. But as of now, if things is going in this manner, there's a very good chance we are going to see the dollar index start to rise. And in fact, if you look at the dollar index right here, we're also seeing that the downtrend, right, it came down so much, it found support, and if you were to plot a trend line right here, you will definitely be able to see a breakout of the falling trend line. So I would say that in the short to mid term, there's a very good chance for the US dollar to start recovering its losses throughout this year and last year. So that is what it is as of now, but there's a lot of other factors we still want to be really careful. All right, so I've talked a lot about the dollar, And so I'll just go on very quickly. In terms of the trading plan, yes, we are looking to sell definitely. So if let's say we are able to see the price pulls back a little bit again, I would say that for the very first level we can actually watch for this price. I think if it's really starting to go down, it will go down pretty fast. So pull back towards somewhere right here will be really good. I would say that 1.22 is a very good price to short already. And of course, but if let's say it continues to range, consolidate, then we want to essentially look at this consolidation formation, or rather a symmetrical triangle right here. So somewhere towards the top, alright, somewhere towards the top. Usually for my case, I always try to look for some form of breakouts, some form of breakout that shows me where is the area that has a lot of trades. So you can see that this is actually the breakout area. So the next level apart from 1.22 will be somewhere 1.22, well, 30 or 25. So it's actually very nearby. You can aim to put in some position at this price, and after which if it really still goes up, then you add more position right here. Have your stop loss somewhere at the top, just to be safe and just to be a little bit more conservative. And then as for the targets, I have plotted this support, I believe. Alright, so this is the very first target we can look at. But if we were to go to the bigger time frame, if it really goes all the way down, the furthest I'm looking at as of now, it could be somewhere right here at 1.199, or let's just put it as 1.2. Alright, 1.2 flat. That would be a very good price to look at, since it's a psychological level. You can definitely see that this is a very important resistance turn support and support turn resistance kind of level. So which is why it's always very important. Alright, so that's for the euro against the US dollar. Alright, so going forward, I will try to go faster because I think I took too much time talking about euro dollar and the dollar itself and going through some of the news right there. Alright, next we have the gold. So as for the gold, let's take a quick look at the weekly forecasts. So for the gold, definitely I'm always bullish about it, but not excluding any strong pullbacks or major pullbacks before it continues to go up. But in any case, let's see how it turns out right now. Alright, so right now it is still consolidating, it's still ranging. If you use Bollinger Band, definitely you are seeing it, the Bollinger Band squeezing very tight, but it does seems to me that it is still supported, just that buyers hasn't came in the sense. We're still seeing the lows are getting higher, highs are slightly getting higher as well. So I think overall itself, I'll definitely still be bullish on gold, even if the dollar were to appreciate. Yes, it does affect the gold, but trust me, when it comes to the gold, usually we want to really look at it separately and try not to be too much affected by how the dollar is moving. I mean, we have to know definitely it does affect, but gold is something that a lot of time when the trends really comes, when volatility really comes in, it moves by itself. Alright, it doesn't really get so much affected by anything else. Okay, so that's just something for you, something for you to know based on my experience. So going forward, I will definitely still look for opportunity to buy, and we can see that this channel, this rising channel that's channeling out of this major trend channel. Right now the price is coming to the bottom again, and definitely this is the breakout zone. So that provides us with a very good demand zone, and we have seen price being supported right here. So definitely I'm looking to buy at this price. But right now, since the price has already reached this level, we do see some kind of supports, but we don't really see a very strong rebound just yet. So there could be a good chance that price might actually go down a little bit further. Maybe there might be some form of a breakout as well before it actually starts to go up. And I just want to bring attention to this harmonic pattern that's forming right here, and if it does form, we will look at somewhere at 70.6%, between 70.6 and 88.6. So that would be like somewhere 1888 all the way to somewhere 1884. So between this region is where we can really go and go bigger size. I'm not saying that you should really trade big. Go bigger size as in based on your risk management. What is the bigger size that you can go? Maybe go at the bigger size or go half of it. I mean, this is the best price I see right now if you want to buy gold. Okay, but if not, if this area right here 1895 does provide us with consistent supports, then there is no reason why we shouldn't try to buy the gold as of now. Okay, because right now definitely this is still a very good support, a very good area of interest for us to buy with the bottom of the rising channel as well as the demand zone right here. So that's for the gold, very straightforward. Where am I aiming? As usual, somewhere at the previous high, which is 1915, and all the way to 1950. That is the main target I'm looking at before I really see a very major correction. Okay, so that's for the gold. Moving on, let's take a look at the Nasdaq, the US stock market. So the Nasdaq, let's see how it has played out so far. Alright, so the volatility is really small. Yesterday it actually came down a little bit after it went up again, and then after it came down again. So there's not much volatility right now. Definitely also because of the market is anticipating what the Federal Reserve might do after NFP has been released. So they want to have more information before market really start to move or make a decision right here. So coming back to the chart itself. Alright, so wow, okay, we are seeing some sort of a gap down. Okay, so but in my analysis, I've been trying to sell to short Nasdaq intraday, simply because of this formation right here, and of course a lot of other reasons. You can refer to my previous video. I've been talking about Nasdaq for the past few weeks. The thing is that this is a very important supply zone because of the neckline that we have right here for this double top formation. Price came down, now it came back to the same level, consistently being resisted right here, and right now it's coming down again. Although it came down, found support right here, but it's not able to go up. I mean, at this point of time, people don't really want to buy yet before there's more economic data. So maybe in order to reduce their risk, some people might continue to sell the US stocks, and that might help to push the price a little bit lower. And in any case, I'm definitely looking to sell. In fact, I think right now we already have a case to sell already. All the way, my target is somewhere right here. Of course, the first one you want to take note of is this support, this range bottom. Now you see, usually if this support, okay, when we look at support and resistance, if let's say the support, alright, is all equal lows and stuff like this, but on the other hand, the resistance are kind of uneven. Usually the area, the side that is more even tends to break. Alright, it tends to break. So in this case, it does seems to me it's going to go down. And first level, if it breaks lower, then first level we're looking at 13,550 and all the way to 13,450. Right, so just these two levels, and I'm not looking to hold my short position on US stock for long term. Definitely it will still go up in the near future. That's what I see. At least right now the market is still seeing that the economy is still recovering. So, and because of the vaccination rollout and stuff like this, and economy is opening up, people are starting to travel. Alright, simple as that. So in the short term, mid term, or maybe slightly long term, the US stock market is still most likely going to go up. Alright, so that's for the Nasdaq. And moving on, we have the US oil. Well, the US oil, let's take a look at the weekly forecast. So what I have right here, I believe I said that it's very bullish. I'm very bullish on oil due to inflation. I mean, economy is opening up right now. More people travel. That means more demand for oil. It's simple as that. So how has it played out right now? Well, it turns out that among all of the 5 major or critical markets I'm looking at, US oil is the most bullish one right now. All right, so definitely in a situation like this where the economy is opening up, things are recovering, traveling is starting to open up as well. Demand for oil is also getting higher. So I think right now, let's go to the chart. Okay, if we look at the daily time frame, it is right now, it has already broke above the top. If we want to talk about resistance, I'm definitely looking at this price at about 66.4. So of course, the best case scenario if you want to buy is to wait for a pullback to 66.4 again, because that's the breakout level, and then go for a buy and just aim for a higher price. How high am I talking about? I'm talking about 76. Why? Because that is a major equilibrium of the entire markets. Okay, so that's that. And but however, if we want to look for if we want to go a little bit more aggressive, obviously we're already seeing this rising trend line. I think yesterday I talked about this demand zone as well. So if you did buy, then of course you could have earned from this trade as well, but you should have taken profit. I hope so, unless you're holding it for long term. But in terms of intraday or swing trading, you might just want to exit the trade already, wait for a pullback. So if you are talking about a pullback, I think we can simply look at this price. So obviously this is where the price breakout, so this is where my support, my demand zone will be. So I'm just waiting for the price to come back to this level. We can attempt another shot, so that is somewhere about 68.5. So 68.5 we can attempt to buy the test. Alright, so at 68.5 we can attempt to buy the US oil again. And target wise, I think I just mentioned, right? But I mean, for the short term wise, in terms of the targets, obviously you can see there's a rising trend line. A rising channel. So just aim for the high. Alright, just aim for the top. That will be somewhere at 70. I think 70 is a pretty good number to take profit as well. Yep, so that's for the US oil. And moving on, last but not least, the Bitcoin market. So I've said that the Bitcoin conviction for buyers is very low. They're not going to add position as of now, although recently there's some some good news coming out. Well, but that's pretty much about it. It's not that simple for conviction to come back for the cryptocurrency. I mean, if people really want to buy crypto, they probably don't buy Bitcoin. They will probably buy something else, other alternative coins that are very low and has high potential to just like fly to the moon, that kind of trend. So how has Bitcoin played out so far as according to our forecast? Yes, I think it has been going very well. It did went all the way up to the top of the consolidation right here. So if we look at the charts right now, all right, we are seeing that price is kind of resisted right here. If I were to kind of plot a channel, right, it is coming to the top, so maybe it might still go up a little bit if I were to try to put it this way. All right, well, it doesn't matter. I mean, as long as you can see the formation. So somewhere right here, 39,200 all the way to 40,000. I don't know. Between this area, you can definitely look to sell again. Trust me, it's going to be range bound. When it reach a high, you sell at the high. When it comes back down to the low, you buy the low. Simple as that. That's for the Bitcoin. Very straightforward. Nothing much to really discuss about it. So thanks for watching. I've come to the end of today's forecast. So if you like what you are watching so far, and do support us by liking our video and subscribe to our channel so that you get updated on our trading ideas on a daily basis. So see you again.